Well, hi once again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Pleased to be joined by Joe Camp, and he is with Comstock Investments. We'll take a look at the Wednesday market action and some things related to the upcoming Ag Outlook Forum that'll be held by USDA in Arlington, Virginia this week. Lots to consider there. We had some big gyrations in the market today. We can't skip over that by any stretch. And just want to remind you, make sure you like this video, make sure you subscribe, and also share it with your friends and relatives as well. All right, Joe, first of all, let's talk about what happened in the market here on Wednesday. It was a downdraft everywhere you looked in the grain markets. About the only thing that had anything positive today was cotton and hogs. Kind of an odd combination, but everything else just really went in the tank. And I was a little bit surprised to see that much momentum ahead of the Ag Outlook Forum. Apparently, the trade thinks it's going to be a pretty bearish deal.
That is the anticipation, it seems, in a big way here today, something that would support these hedge funds, the large speculators leaning further on the market. It fits with a real bearish set of technical leanings here. And ultimately, you have, back to the fundamental input that we're going to have to chew on here later this week. This expectation that we're only going to see the balance sheets padded further insofar as these supply numbers are concerned, because what this Ag Outlook Forum does for us is provide a forward projection. It builds on the baseline estimates, the 10-year projections that the government uses for the budget purposes. And in the numbers that we are getting starting tomorrow, it's a shift in the focus in a big way towards what's ahead this upcoming spring because of the acreage estimates that are included. The general consensus is that we're going to see a shift from corn to soybeans of about 3 million acres. Still more corn than soybeans, but some rotation here in the season ahead. And the other item of attention here would be the trendline yield estimates, knowing that we could see a corn yield at 182 bushels per acre or higher, and soybeans up 53, 54 here in years ahead. That's something that, again, builds supply and fits with these projections for ending stocks going forward that are building on this year's higher levels. So expectations that we're going to be comfortably supplied, carry out 2.5 billion bushels on corn, and say for soybeans 400 million bushels. And a lot of that, again, goes back to these trend line yields. We see what corn yields done over the years, and the expectation is that we can continue to grow that.
So I guess my question is, historically, how accurate are these Ag Outlook Forum acreage estimates? I mean, they're still subject to change, of course. We won't get the planning intentions until the end of March, right?
Right. There's a huge moving target on these numbers, but they're the only thing that we've got in a first look for these planning numbers ahead of what you mentioned, the March planning intentions report. So those can deviate sharply. So too can they from this update into March, into the June acreage survey and beyond. And, it's just like last week, the crop report there, we say, how much will these numbers for South America deviate early in the year from where they're actually going to end up? How often do we see these big gaps from USDA over private sources or over CONAB, Brazil's crop agency? And the answer is we've seen big gaps, maybe not quite as large as we've got going this year. If it supports the attitude of the prevailing wisdom, which right now is a bearish one because of those large speculative holdings in the corn, soybeans, and wheat, it's going to be something that they're going to seize on and trade. It can also be something, though, that gets priced in and then allows some bit of rebound from here, thinking that, okay, we've factored in what could be the high water mark for supply going forward. And, maybe this is a market that's well enough priced it in. And so it's time to expect we could go in the other direction, at least briefly.
You put together a graphic that we can bring up here talking about the corn yield tendencies. And I wondered if we bring that up for our viewers here, talk to me about that corn graph. How do you come up with these estimates on the corn for projecting out ahead?
Yeah, this would be the previous yields for corn and it previews what we're going to have in this USDA number out tomorrow with a trend line estimate that is, again, just that, a trend, but also one that's projected to grow at an estimated clip. The nature of it is that though we begin the year, I mentioned maybe 100, as high as 182 bushels per acre we could see going forward. That would represent record yields. So that's what a trend does in a growing type of yield environment like we've been in with better technologies, namely, and better growing practices as well. But that's the risk of it, is that we continue to build supply, starting with this number. Again, back to what we just mentioned, it could also be a source of rebound if we say, yeah, that's as high as it's likely going to be. It is hard to produce record corn yields, even though we did so this year. It only leaves room that potentially, unfortunately, we could miss the mark from here. So that's about getting it behind us, I would believe, these next few days.
All right. You also have a graphic that you put together related to the soybean trends. And also, I believe you have a momentum indicator built into that as well. And I think a few folks might be a little bit surprised to see what you have to talk about on this soybean graph.
Yes, new lows for the move here. We're approaching 3-year lows, knocking on the door here, down to a real key level of support, a price low that was last achieved in November 2021 before the market started to turn higher again. And it also coincides as well with an important retracement point, 62% Fibonacci style retracement down from this broader run up for the last 3.5 years. Maybe we're at a point where we start to find a bit of support, or at least start to see some easing of the selling pressure. You could also suggest that selling might be close to being exhausted. If you look at that momentum study or others, this is just a basic relative strength index. It's a popular one. This is on a continuous basis. We could really drill into it, but they're all showing a similar idea, which is that even with prices making new relative lows, we don't have the RSI making a new low yet, or a lot of these other momentum studies, which could start to suggest there's some bullish divergence forming and that we could be due for a correction higher.
Well, I hear so much talk now about how the large funds are positioned in the market. Seems like we're getting to rather historically short positions right now. Is that right?
Yeah, we can tie that in because, it's the funds that are trading with computer algorithms that are trained on these technicals, like what we just looked at for the soybean chart. Another graphic that I prepared was the trader positions for corn. And it could be similar for soybeans on the managed money end. Those are those hedge funds we talk about, the large speculators holding almost a record net short position in corn and soybeans. And you see that opposed to where the commercial crowd is positioned, which is having a rare net long in this market. And that's something that's been a negative as of late for price potential, is that the speculators know there's a lot of corn out there in farmers' hands left to sell. And that's indicated by that net long held by the commercial hedgers. Normally, those elevators, end users would be hedging short the purchases made from the farmers, but they haven't made those purchases yet. And for that reason, they don't have a big, heavy net short position like is normally built up. But you get further along in the year, and the idea is that more of that grain has got to come out, more of it ahead of the next planting season that we're talking about, more of it ahead into the end of this month, the basis contracts coming due that we've mentioned a couple of times here. That's maybe the flip of it. The silver lining would be if we can get out of this month, out of the initial delivery period for these March futures, it could be a chance to see those hedge funds start to cover shorts, take profit. You get to a point where they don't have as much ammo that they're willing to add to the bear case. Instead, they want to cover some of those profits and not to be the last one to do it. And you get a rally on that accord. And it lines up too with what the speculators would know in being a normal seasonal uptrend heading into the months of, say, April, May, June.
All right. Last week, you actually attended a farm show, I understand, I believe in the northern part of the U.S. If you would take a moment and talk about that, what kind of feedback were you hearing from the farmers there? What's their main concern? Um, what are they concerned about when it comes to the marketing? Are they way behind? Or what did you talk about when you were there?
We had a booth Comstock did at the Winter Farm Show in South Dakota. We'll have a couple of these types of meetings going forward. It is winter meeting season. You have a TV display where you're showing prices throughout the market session. And of course, not much good to look at for these grain farmers as they're walking across the booth and kind of, hanging their head and commiserating. The real question is simply, when is it going to end? And this refers to the, latest slide, this leg lower for the market, really pinching marketing opportunities. And that fits too with the questions that we had and more intimate discussions. And what do I do about? A lot of it was linked to what should I do with this remaining a block of corn that I've got on a basis contract. And that's the conversation we just finished here, that there is a lot of corn outstanding on a basis contract, and farmers have to decide by the end of the month whether or not they're going to price it and, in a way, throw in the towel or roll it forward with the risk that they're buying into a carry market and the board could continue to slide lower here before they ever have a chance to price it at what is desired to be higher levels. So there's not an easy answer. The general answer is try to maintain exposure to an upside rally that could potentially come into this spring. I go back to what I said about the seasonality of normally expecting highs in May or oftentimes June. If we can hold ourselves over to that point, and it might mean pricing these basis contracts because we need cash here ahead of the spring, but that would involve also considering, say, options re-ownership, talking with your advisor about your alternatives there, and having some potential to potentially wrap up old crop sales at higher prices in May or June and to have a better start on new crop marketing at that time. So it's a conversation, again, of kind of commiseration, but also trying to provide a light at the end of the tunnel, saying there's still an opportunity we could see better prices and better levels to be selling later.
Well, there's two things I wanted to remind everybody about. The Brazil crop is coming online already. Early soybean harvest is already adding to the supply there. It won't be long before we'll get that into the shipping channel. Second corn crop is already in the ground in a lot of areas and getting a good start from what I understand. That could be a problem. But the other thing I wanted to point out is the fact that if you don't do anything, if you just sit there with the grain in the bins, in actuality, you're speculating, right? Because you're more or less taking a position on it right there.
Right. We talk about, re-owning upside for sales. There's also having protective floors in place that we're discussing for those that are going to hang on to what's left or to wait on making new crop sales here. So again, while some patience might be prudent, it's like you say, not the worst thing to have certainly to have a plan and to have hedges for what could be a worst case scenario for whatever reason that is, whether it's Brazil or heavy plantings or good weather, hopefully ahead for our season.
Well, pretty serious considerations need to be taken this time of year, and especially with the meeting coming up in Virginia. You might throw out your phone number there. I'm sure you probably have a lot of questions, even after the farm show, that people want to ask you and get more information about. How do they reach you?
Sure. My direct line at 712-227-1095. My email, joec@comstock.com. Of course, all of our contact info, access to our reports up on comstock.com.
That's right. You can also go to comstock.com/report to get in on some of the premium content that we have to offer. You can even subscribe to it for a month for just $1. You might want to check that out too. Joe, it's been a pleasure. Thank you for joining us here today. Kind of a tough topic, but you shared a lot of good information, and I appreciate that. Joe Camp, and he is with Comstock Investments. That'll do it for this episode. For producer Brianne Hendrickson, I'm Marlin Bohling. Catch you next time on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well.